Thank you for standing by and welcome to the Limeade conference call. All participants are in a listen-only mode. There will be a presentation followed by a question and answer session. If you wish to ask a question, you will need to press the star key followed by the number 1 on your telephone keypad. I would now like to hand the conference over to Mr. Henry Albrecht, CEO. Please go ahead.
Thank you, operator. Limeade CEO Henry Albrecht here, presenting our cash flow results for the fourth quarter ended 31 December 2021. Joining me today is our CFO at Limeade, Todd Sparts. I will start today's call by focusing on the main takeaways for the quarter. We signed 6 new Limeade Wellbeing Enterprise contracts during the quarter, generating $3.6 million in additional CAR, with 1 European Union and 5 North American customers across the healthcare, financial services, and retail sectors. In addition, we signed 59 new Limeade Advanced Listening customers, which are actually customers from our TinyPulse acquisition that we did in July of this year, which are mostly mid-market and SME customers, generating an additional $0.5 million in CAR. The TinyPulse acquisition has outperformed our internal expectations at the time the transaction was announced, July 2021. Our final FY21 contracted annual recurring revenue, or CAR, was $56.8 million, up 3% on FY20. From a cash perspective, collections were strong, with operating cash outflows of just $0.2 million US dollars, all dollars today in USD, for the quarter, and for the full year total, operating cash outflows were $6.2 million. Our cash position stands at $13.9 million with no drawn debt. As we commence FY22, our sales pipeline stands at $47 million, including $14.7 million in finalist and verbal stage deals. Given the unpredictability of our earlier stage marketing pipeline, which has proven to be a poor indicator of growth during the COVID-19 era, 2020 and 2021, due to budget uncertainties, delays, and freezes, at this time, Limeade has elected to report only the later stage sales pipeline to reflect the company's more predictable finalist and verbal pipeline status. Finally, we are today reiterating our FY21 financial guidance of $50 to $53 million in revenue, an EBITDA loss of $5 to $8 million, and a net loss after tax of $7 to $10 million. This guidance is unchanged from the start of 2021 against the backdrop of significant uncertainty in the markets we serve. Turning now to our operating highlights. Our view on employee benefits budgets continues to be positive, which, as I mentioned in Q3, had started to return to a somewhat more normalized sales cycle in our core North American well-being market. During the quarter, Limeade successfully launched Limeade Wellbeing to the mid-market, which significantly expands the total addressable market, or TAM, in the 500 to 5,000 employee market segment for our business. Feedback from prospective customers so far has been positive. Overall, year-to-date net revenue retention, or NRR, was 80% as at 31 December 2021. Limeade direct customer NRR was 85%, a decline of 5% versus the PCP, and 1% on Q3 2021, while indirect or partner NRR was 31% versus 66% last quarter. The decline in the direct channel was driven broadly across the customer base, with retail, transportation, and other vulnerable sectors accounting for the majority of the decline. Limeade is now focused on building healthier and more strategic indirect channel partnerships in FY22 and beyond. Our cash and recurring subscription revenue from the existing customer base remains strong, with the top 20 customers on average having 20 months remaining on their contracts, which is an increase from 19 months at Q3 2021. As I mentioned, Limeade ended FY21 with CAR of $56.8 million, up 3% on FY20. The primary drivers of the CAR changes during the year were the acquisition of TinyPulse, large enterprise Limeade Wellbeing sales on the plus side, and then the non-renewal or loss of several key customer contracts, including top 10 customer American Airlines previously disclosed, a misaligned indirect Limeade Wellbeing mid-market channel, and a new contract win rate reflective of the challenging economic climate in the North American benefits and wellness markets. As at 31 December 2021, indirect Limeade Wellbeing CAR represented 3.1% of total company CAR versus 10.3% as at FY20. I will now turn the call over to Todd Sparks, our CFO, who will provide a brief summary of our quarterly cash flow information as released to the ASX this morning. Todd?
Thank you, Henry.
And Todd, if you're on, there you go.
I am pleased to report our financial position remains strong, with our cash position of $13.9 million as at 31 December and no drawn debt. I will remind investors the company maintains a $15 million undrawn credit facility with Comerica Bank. Accordingly, Limeade remains well positioned to capitalize on both organic and inorganic growth opportunities in 2022. During the quarter, the company recorded cash receipts from customers of $22 million, up 55% versus the prior corresponding period, or PCP, reflecting the contribution of Limeade Advanced Listening, the former Tiny Pulse product, and the timing effect of a large annual subscription payment from a significant enterprise customer collected during the quarter. Net cash receipts from customers, after adjusting for payments made in relation to the sale of third-party products and services, was $17 million, up 42% versus the PCP. Third-party payments of $5 million were up 117% versus the PCP and sequentially up 24% when compared to Q3 2021, reflecting an increase in demand for biometric screenings and well-being incentives. Cash payments during the quarter were directed towards the following costs: staff, $9.9 million, administration and corporate, $3.8 million, operating, $1 million, marketing, $0.8 million, and research and development, $1.7 million. The 10% increase in quarterly staff costs versus the PCP reflects the additional headcount from the Tiny Pulse acquisition. The increase in Limeade R&D versus the PCP reflects that acquisition, in addition to certain contract development investments into the Limeade Wellbeing platform during the quarter. Overall, Limeade recorded operating cash outflows of $0.2 million for the quarter. Investing cash flows for the quarter were $0.85 million, reflecting Limeade capitalized software development costs incurred. Turning now to our expectations for the full year FY21. As Henry mentioned, Limeade is pleased to reiterate our financial guidance for FY21, and I will repeat: revenue of $50 to $53 million, EBITDA loss of $5 to $8 million, and net loss after tax of $7 to $10 million. I will now turn the call over to Henry for concluding remarks ahead of Q&A. Henry?
Thanks, Todd. Appreciate it. Limeade remains a leader in immersive employee well-being solutions that create healthy employee experiences. We're ideally positioned to benefit from the continued major structural shifts in the way people work worldwide and look forward to continued business momentum in 2022. I would now like to hand over to the operator for the question and answer session.
Thank you. If you wish to ask a question, please press star one on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star two. If you're on the speakerphone, please pick up your handset to ask your question. Your first question comes from Tim Lawson with Macquarie. Please go ahead.
Hi, Henry. Just a couple of questions I had. Can you just talk about the sort of environment around HR budgets? I know you've called out that sort of finalist and verbal number, but just a more sort of general comment on how you're seeing the market, please.
Yeah, thanks, Tim. I think just about the way we report, I don't think it was as useful to our investors as it could have been to say we have 100 or 200 or 300 million who, are downloading white papers or roughly qualified. So we're just trying to focus on what's more likely to, be a good predictor of future new cars. So that explains a little bit of that. What we're seeing in the market is, I think we saw great pauses in 2020 and 2021, frozen budgets, delays, maybe teams actually in the benefits department that were just understaffed. They've had their own employee turnover, and they can't take on as many projects as they did. And a lot of the projects were brand new, mandatory things like vaccine requirements and working from home and facilities. Now that I think they've gotten all of that, under their belt, we are seeing the return of real budgets for employee well-being platforms in North America, and more broadly in Europe, kind of a broader commitment to a better, more healthy employee experience. And then, of course, in the mid-market with employee listening, just making sure you can keep a pulse on your workforce with Tiny Pulse, or as we're calling it, Limeade Advanced Listening, in a world of not seeing each other face-to-face again. So I would just say that's a long-winded way of saying we're seeing demand return. We will know whether it's returning to the same levels as 18 and 19, greater levels, and we'll report on that. But right now we're feeling optimistic about the return of the budgets that we sell to. Okay. Which I think is manifested in the later stage pipeline. Yeah, go ahead, Tim.
Yeah.
Sorry.
Yeah. So just a follow-up question then. So the second question, just around obviously the NRR sort of fallen away on that indirect channel, but how material is that to the group from a car perspective now? I think it was in the sort of maybe a bit more than mid-single digit last time you provided that. So I'm just wondering where that sits now.
Yeah, I think if you want to find a silver lining in the dark cloud of the, I think, somewhat misaligned mid-market channel we have, is right now that only reflects 3.1% of our car. And so we are actively seeking more strategic and aligned reseller or indirect partner channels, partnerships. But right now that's just 3.1% of our car. Was that the question you asked?
Yeah, that's great. That's exactly what I was after.
Yeah.
And then just you continue to make that comment around inorganic opportunities into FY22. Can you just talk about any sort of gaps you're seeing in your business, how you might fund those acquisitions, sort of how sort of near term those opportunities?
Yeah, I mean, I think the Tiny Pulse acquisition is probably a good example of what we're capitalized to do more of. It was what I would call small-ish acquisitions. They were doing just north of $6 million in continuing revenue when we acquired them, as we announced in July. We with roughly almost $14 million in cash and a $15 million undrawn debt line, that does create some limitations on the size of deals we can do absent new financings into the company. I think our job right now is to perform, have our acquisition perform, earn the trust of the markets, and then that should expand the types and sizes of opportunities that we get to look at. But Todd, is there anything you would add to what I just said?
No, I think that covers it, quite well. I mean, we're laser focused on growing our direct business, growing some green shoots that we're seeing in the EX market, particularly in Europe, growing that mid-market listening opportunity, continuing to go to the mid-market with our well-being solution, and then really growing and developing healthy channels that will be much more strategic and impact the business, I think, in a much greater way and really help the overall enterprise as it focuses on that, both direct and indirect well-being. But for now, we're just migrating away from that indirect channel.
Thank you.
That's Tim, I would just say we are always actively seeking great opportunities, and we have staff focused on inorganic growth as well.
Okay, thank you.
Thank you. Your next question comes from Seth Hoskin with Canaccord. Please go ahead.
Thanks very much. Hey, Henry. Hey, Todd. How's it going, guys?
Good. Well, thank you, Seth.
Just a couple of quick questions from me, and potentially maybe something that you'll flesh out a bit more at the full year result. But could you just run through, I suppose, what the key product initiatives are, or where the R&D budget's expected to go in calendar year 22? I suppose, and in particular, is there any features that you think customers are looking for, or that customers in the pipeline are looking at that you think could really help with that retention or customer acquisition throughout the year?
Yeah, I think I could take the first crack. I actually have a delightful list I'd prepared, but it might take me just a second to find it. Certainly, this has been a journey of transitioning from our legacy Limeade capabilities into our Limeade One platform, and so I think with that comes some pretty major R&D investments that we have made, and that once the full migration is complete for our entire customer base, which the majority of it is done already in terms of customer count, that should actually free up a lot of our resources for additional innovation. But we are delivering innovation to the market right now in the form of things like proving value with our dashboards and reporting, integrating seamlessly into the flow of work by integrating with things like Microsoft Teams and Microsoft Viva, and agile innovations that just drive increased usage and user value delivery. Todd, is there anything you would call out specifically?
I think we're I don't know if you can hear me. We're focused on I think Henry focused on the items correctly. It's really about improving dashboarding, delivering additional reporting and features, tightening up some of our usability and accessibility. Those are really what we hope to deliver in 2022.
Yeah, I might actually just add, Seth, a little bit more on the listening piece. Obviously, with the acquisition of TinyPulse, Limeade Advanced Listening, I think a lot of things related to listening and keeping our fingers on the pulse of employees is a big trend, and that applies not just to the employee engagement and inclusion surveys you might find with TinyPulse, but also with the way we think about our well-being surveys and assessments, how we manage the data, how we provide machine learning and insights to individuals and companies on top of that. I think that the mid-market access is a big deal for us, launching Limeade Wellbeing to the mid-market. Some product-related investments there, but a lot of that is just making sure we have a very streamlined go-to-market process so that we can make that a high-margin part of our business as well. And then the last thing I didn't mention before was the global optimization. I think, now being in 17 languages and counting, to really serve the large companies who care about amplifying care from the company leaders across their globally distributed workforces and compliance and all that goes with that. So those are some key areas of investment.
Thanks, Henry. Thanks, Todd. That's really clear. And then just my final question was just on sales headcount expectations. So how do you think you're resourced in this area as you enter this calendar year? Are you expecting to kind of add sales headcount?
I think one of the great things about our recurring revenue, predictable SaaS business is our ability to flex up and down, and to add sales staff and or capabilities in sales and marketing when we prove it. And the flip side of that is being financially responsible. It does mean something to us to meet the commitments we've made to the market. And so when we see deals close and keep your eyes peeled, we feel good about maybe the first half of the year, which is normally a very, very slow time. That's something we would actively consider, is expanding the staff on the sales side. As of right now, we feel very well prepared to meet the demand that we see in the market.
Thanks, Henry. And just following on from that comment then, so, I'm sure you can't say specifically, but was there a few deals within that sort of finalist and verbal stages that have the sort of potential that they didn't get closed right at the edge, but they could fall into one queue?
We'll see. I would just say in general, we've seen the demand come back, and it hasn't had I think there's actually a stronger, if you just look at the numbers, there's more CAR in finalist and verbal award in our pipeline this year than we've seen perhaps ever before, even a little bit more than last year. We just want to make sure we're not, predicting a future and putting dates and times on things at this point in time. So I appreciate the question, Seth, and I think I'll give you, what was that, about half an answer. And thank you for your understanding.
No, I understand that. Thanks very much, guys. Appreciate the time.
Appreciate it, Seth. Thank you.
Once again, if you wish to ask a question, please press *1. Your next question comes from Sean Kumar with Chambers Global. Please go ahead.
Hi, Henry. Hi, Todd. Thanks for your time. Two questions, if I may. The first one, a bit of housekeeping. Can you give us just a rough sense of the contribution from Tiny Pulse on a CAR basis? I know Todd mentioned previously from a GAAP revenue basis it would be immaterial, but just curious, just ballpark contribution.
Todd, is that something you want to take, or do you want to defer it to your financial results? It's up to you.
Yeah, no, I'm happy to. Yeah, I'm happy to take it. So I anticipated that there might be some questions around CAR, and I certainly understand, particularly as we've been talking about Tiny Pulse and advanced listening, and that it's green shoots, and that it overachieved kind of our expectations vis-a-vis when we acquired them. So I understand from a model building perspective and just a general market perspective that there'd be questions there. But I'd really refrain, because when we produce and present our our FY21 investor presentation deck, there'll be quite a bit of detail around direct and indirect and EX and well-being and advanced listening, of which that's Tiny Pulse. So I think you'll get a lot better visibility and understanding in about a month's time.
Okay, perfectly. Yeah. Okay, that makes sense. So I guess we'll wait till February or so for full year for that. That makes sense. And then the other question I had, just any other just general comments rather than market environment, but just on competitive environment, maybe how others have responded to the challenging, potentially improving and market dynamics, kind of relative to your approach, perhaps.
Yeah, I would say one thing that we've noticed in our core well-being market is a bit of a bifurcation, where some of the players are, I would say, going very hardcore into clinical health areas, serving patient populations, hospitals and health systems and health plans as their core and exclusive focus. Limeade's primary focus is the employer market, and we see such amazing connections between health and well-being and things like employee engagement and lower turnover and a greater culture, even higher performance and fewer safety incidents and that kind of thing. I think we're very focused on our purpose of transforming work through what we do, and so I think being a primarily employer focused is probably a differentiator. The competitive landscape is also highly fraught with M&A. We have direct competitors that were maybe 5 or 6 direct competitors 5 or 6 years ago, and they've all been rolled up, and now they're one company, made up of 6 or 10 or 12 different companies. And so I think there's been a ton of aggregation, and I think it leaves Limeade in a unique position as a founder-led, independent, mission-driven entity trying to transform work through well-being. I think that's a unique positioning in the market, given all the M&A that's occurred. And then I think one other observation for those of you who don't maybe live every day in this world that we breathe in is we've seen a massive expansion of niche solutions for everything from musculoskeletal to pregnancy or maternity care to dozens and dozens of other benefits, financial, 401k, all of these things. And it leaves this challenge for the HR and benefits leaders. And so there is budget for those, and companies have bought those, and they've maybe bought dozens of them. But now they're starting to free up budget to say, I need to now drive these essential health and well-being benefits and other HR programs to the right people at the right time. And I need to promote all the company programs with relevant and personalized communications, which is a great strength of ours, nudges, activities, content, leader support. All of the things where Limeade is invested in this platform thinking are really coming to the forefront as a need. How can you put this all in one place and be a hub? And I think that's why our flow of work with Microsoft that we announced last year is important, because they're even a broader platform where people are sending emails and doing calendar and Teams meetings all day. And we want to make sure that we're presenting these experiences in the most usable and relevant way to the end user optimizing for the employee as much as we possibly can while still serving our customers well. So the demand for that platform, I think, is what we're also seeing come back.
Great. And then can I just ask a related question to the second part, just on the expansion of niche solutions, et cetera. I know, you've been de-emphasizing the, indirect channel or perhaps trying to figure out a different approach to that channel. But do you have kind of a means to reach, micro organizations, or almost down to kind of individual users who are not attached to an enterprise? And I don't know, is that something that's potentially interesting, or does it kind of stray a bit further away from your focus?
That's a great question, Sean. I think the first thing I would say is we're an agile company, and our first agile step in going, down market in general is to enter the mid-market, which we consider the 500 to 5,000 employee space. I believe that, stepwise, when we learn from that path, which is very promising right now, we will, evaluate smaller companies, et cetera. And I come from Intuit as well, so I love small businesses. I love small business marketing. I love entrepreneurship. And I know that small business owners care about their employees. And we're in the business of amplifying care to workforces. So I would say we'll keep our eyes open, but we really also want to focus and make sure we execute first and foremost in the enterprise segment. We serve as our primary breadwinner, and then second with our mid-market approach. I don't see us actually, ironically, as an individual service for individuals, because a core part of our science and our point of view and our purpose is to transform work and provide true organizational support. So I would say small businesses, maybe, mid-market, absolutely, and enterprise is the core of what we do.
Great. Thank you both for your time.
Thank you, Sean.
Absolutely.
Appreciate it.
Thanks.
Thank you. There are no further questions at this time. I'll hand back to you for closing remarks.
Thank you, Melanie. Thank you all. We look forward to catching up again at our FY21 results in late February. And I hope to see many of you in person in March, when my current plan is to be in Sydney and Melbourne in Australia. Onward.
That does conclude our conference for today. Thank you for participating. You may now disconnect.